Hints of a conflict brewing came through when the United States indicated that it was evacuating some of its personnel from the Middle East in the middle of last week. And while the fighting has escalated and become more far-reaching over the weekend, the markets have responded more calmly than one might have anticipated. The oil price did jump significantly last week, immediately after the first strike from Israel. But while the Brent crude oil price remains elevated, it's stable.
Markets are more calmer, and I think it's a question of they're waiting to see how will the U.S. intervene. Oil prices continue to be at elevated levels because of the possible supply disruptions, but the very same supply disruptions might be mitigated by the fact that if this war gets out of control, then definitely it will affect the global economic growth. Then there won't be any good demand when it comes to oil, and it is expected that market participants will continue to look for a safe place to put in their money. In this instance, they've been looking at the likes of gold and the likes of the US dollar itself.
Following the global economy's hard-fought battle in bringing down inflation over the last couple of years, economic observers remain vigilant as to what a higher oil price, if sustained, could mean for global inflation over and above the uncertainty that remains around the US administration's reciprocal tariffs, which currently remain suspended.
We're monitoring this very carefully, given the impact that this could have on global and domestic inflation, depending on how much oil prices ultimately rise. Fortunately, so far, the Rand exchange rate has been reasonably resilient, and that would of course help to temper any potential inflationary impact of this Middle Eastern tension and higher oil prices. But of course, the uncertainty created by this tension in the Middle East is not conducive for an already fragile global economy.
While markets have been characterized as calm under the circumstances for now, and emerging market currencies like the South African Rand haven't depreciated to the extent that could have been expected, this could very well be the calm before yet another market storm. Because if the hostilities in the Middle East worsen and are prolonged, investors will likely become more risk-averse, especially with talk of the use of nuclear weapons, the global consequences of which would be very difficult to predict. Nampumelelo Siziba, SABC News, Johannesburg.